Starting on the consumer front, Guinness Ghana posting some strong results there, turnaround in the third quarter from a loss-making position to a profit-making position, and predicting some strong growth for the full year. Many saying an opportunity then to invest in a company where we're likely to see perhaps growth of up to 30% for the full year. What are your thoughts on the counter?
Yeah, I think you're right. They delivered a top-line growth of about 21%. To about 36.9 million cedis on the back of volume growth, which was reflected on the impact of excise change on consumer demand. In addition, the business has also taken price increases in order to address the margin erosion arising from the input cost. We believe that the management is putting initiatives to improve the efficiency of operating assets, as well as also managing their cost increases. As you can see, the results, we saw the fruits from the result, which the cost increased just marginally by about 5%. The company also continued to manage their SG&A costs as they invested in their brands with what is popularly known here as the Guinness Football Challenge, and also they've managed to deal with the currency devaluation. So looking forward, we believe that the economic outlook remains positive. As such, Guinness will be in a position to continue with its current performance. We also trust that the successful conclusion of the renounceable right issue, which will end somewhere in November, will further address the finance cost that the business incurs and position the business in the right future for
the stock trading just above 1.50 cedi. Is this an opportunity to be getting in? It has traded all the way down to around 1.20 cedi at one stage this year. But as you say, there's that upcoming rights issue. Do you wait and see what takes place on that front, or do you get in at this level?
Yeah, I think it's okay for you to put up a wait and see. If you're an investor, I think you can also take up your right if you will. But it's good to see what they are to. But the numbers are looking pretty good, and we're very confident that going forward they will put up even much better results.
Now, on the banking front, the latest bank to release its results is Standard Chartered. A mixed reaction to these results. Many considering this quite a stable stock in the banking sector, but a 1.2% decline there in quarter three earnings. Were you disappointed by the numbers?
Yeah, a little bit disappointed, but you wouldn't blame them much. You know, Standard Chartered was the first bank to drop its base rate to as low as 16.95%, and this affected their interest income, which declined marginally by about 3%. The bank did that. They thought that when banks reduce their interest rate, it reduces the cost of borrowing for businesses and also creates a suitable condition for businesses to make long-term investments. So they thought that it was in the right direction. But bottom line-wise, you realize that there was a bit decline there, and that wasn't like Standard Chartered. But the stock has been pretty stable. We believe that going forward, the bank will continue to remain the best international bank in the country. Yeah.
On the local banking front, GCB also out with numbers. Loans and advances for quarter three plummeting some 95%. As a result, net interest income slipping back almost 30%. Do you see their conservative approach to their loan book being intentional?
Yeah, before they released the result, the managing director came in to say that they are very confident that the bank will end the year with bigger profit margins. As you rightly said, they recorded a lower interest income by about 37%, and this was as a result of a lower lower book growth and reduction in earning assets. Their loans and advances also reduced by about 55%, and due to the restructuring of the TOR debt. But the bank is actually targeting retail, SMEs, and private sector to gradually grow its loan book, whilst they hope to exploit other opportunities in downstream oil sector. So going forward, yes, we think that GCB will deliver on its platform and enhance its provision of reliable services to customers. We expect GCB to be to have a positive performance by year end, as the MD said.
Hilary, what type of trends have we seen in the banking sector with regards to growth in non-interest income?
Sorry?
What type of trends have we seen in the banking sector overall with regards to growth in the non-interest income side of the business?
I think it's mixed. With some of the banks, such as UT, we continue to see strong growth there, but with the bigger banks, we continue to see a downside to it. We see that kind of trend in some of the bigger banks, such as GCB and SCB. But in the smaller banks, such as UT Bank, I think they are doing very well in that respect.